And we are now recording live. So we have a couple of our panelists here, Yami and Ray. I'm just going to use first names because this is a very laid back session, and I don't want anybody to
Sounds
be
good.
uh, uncomfortable or anything. But someone's asking a question. Okay, we'll just get started. I wanted to make sure we start on time. Good afternoon, everybody joining me and my friends for our first webinar, first of many. Got a huge announcement at the end of this session. I'm so excited. I know y'all see me smiling in front of my red Kappa background, but a lot of y'all already know who I am, so not going to introduce myself, not going to talk about all my quote unquote accomplishments. This session is for us to just talk. Like I said, this is the first of many. Uh, and the reason why I wanted to do this today is because I've been getting a lot of feedback and questions about options trading, day trading, retail investing, things of that sort. So I decided to just have this chat. I'm really excited about the panel at the end and the question and answer session. There's going to be a brief survey at the end of this recording um, for your comments. So I want to just start. Like I said, I really want to make sure we start on time. I really appreciate everyone joining in. People are coming in as I speak now. But this will be recorded, and you'll be able to go back and look at it for your viewing pleasure. Hopefully, you learned something today. So, for those who don't know me, my name is Ashton Taylor. I live in Houston, Texas. I've been day trading since March. So very new to this, but I've been investing, playing with E-Trade probably for about 12 years. I remember my first story on E-Trade, it was basically the computer. And I saw some guys I went to the University of Houston undergrad, and I used to always see these guys back in the tech age, way long time ago, um, on the computer trading stocks. And I knew nothing about the stock market. I have an older brother who's in the finance and he's a CPA, but I never really knew too much about the stock market. And a funny story, I'm originally from New Orleans. The funny story, the first time I knew anything about saving money was from my mom. My mom is now, I'm 43, so my mom is 40, 87, I'm sorry, 75. So back in the day when I was growing up, I saw my mom, she had savings bonds. And I was like, man, what are these things? They look like, I don't know if you guys, some of you are really young, but they look like coupons. I thought they were food stamps because, we were poor. So I thought they were food stamps, but they were savings bonds. Imagine that. And so I had a conversation with her about a week ago and I told her what I was doing and I was investing. So I said, Mom, I want you to come on and tell the people about you and these savings bonds. But she totally refused to do that because she's thinking I'm trying to get some money from her. So she was like, no, I'm not talking to you and your friends about no savings bonds. But anyway, that's my first experience with saving was with these savings bonds. So, now bonds are nothing. Bonds are like, we're at like a 1 point something interest rate when it comes to treasury bonds. So I decided, you know what? I'm going to talk more about what I'm doing now as far as my savings. So, I want to make this disclaimer when I go out there. None of this, of course, is legal advice because I'm an attorney. None of it is investment advice. I'm not a stockbroker. I'm not a financial planner, advisor, whatever. So this is just basically me telling my story and sharing information. I want these sessions to go on maybe every quarter. If it really gets good, I mean, we have about 35 people on the phone call on the call now. If it really gets good, we'll come together. We talk every week if everybody gets serious. But I just want to share the knowledge that I have. I have my panel, Ray and Yami, they're on now. They'll be speaking at the end, sharing their experience. I know Ray does Forex. Yami does trading beyond earnings, which is going to be something good for you guys to hear. So like I said, I got my E-Trade account. My first stock purchase, which is amazing, was Apple, because that's all I knew about. So I purchased Apple. I purchased maybe like a couple of shares. Apple was like $40 a share. And so I'm not going to get into that story because, I'm just going to kick myself for not staying in that stock. So that being said, that was my first experience with the savings bonds and the E-Trade account. And then, like I said, my brother does day trading, and he was doing options trading. So I said, you know what? Let me try to figure out what this options trading is about. So I talked to him, and he was always like, you know, if you don't know, you're not doing your research, don't do this, don't do this, don't do this. So I didn't follow his advice. I did it anyway. So I started investing in options, like I said, when the pandemic hit. We all were on lockdown, courts were closed. My full-time job was really not existent for a while. I have two young kids. I mean, they were homeschooled and they were at the house. The wife was at the house. So just had some free time. And another thing that I realized back in December 2019, I started doing different budgeting. I found myself spending a lot of money on stupid stuff. I know some of my friends probably on this call own bars, but I was spending too much money in the bars, too much money having fun. And so I locked myself down before the pandemic. And I realized, because I do my own taxes, I realized in 2019 how much money I was wasting on alcohol, cigars, whatever it was fun. I was wasting a lot of money. And so what I told myself is, okay, I'm gonna try to budget this thing differently. Let me start calculating the amount. And I'm not gonna tell you how much money I was spending, because it's embarrassing. Some of y'all probably know, but it was a lot. I'll get to that. So what I did was I said, you know what? I'm gonna take this money on a monthly basis that I'm spending, and I'm gonna start saving it and investing it. Best decision, one of the best decisions I've ever made. And that's just how I want to start. This month, this investing thing comes down to money that you can waste or you are spending frivolously. Do not use this money in the stock market for rent. Money that you would use for rent, money that you would use for childcare, money that you would use for anything. I suggest that the first thing you do before you get involved in this is budget. You get your fixed expense and your living expenses, pay that, and anything residual, you can, I would suggest that you invest in the stock market and start playing with that money. So I want to get into the slides. I was kind of wanted to do an introduction, kind of wait for a couple of people to join on, but let me just read some things to you. Americans, this is a pandemic piece of information. It says, and this is from the Wall Street Journal, Americans saved 1.4 trillion in the first three quarters of 2020, or about twice as much as in the same period of the prior year. So we, as Americans, we saved in the first three quarters twice more than we saved before, because everybody was on lockdown. According to analysts by Bloomberg Economics, the amount is equivalent to nearly 10% of 2019 household spending. So that's a good thing. So we start saving more during the pandemic. Another piece of information I want to read to you guys in the beginning here, before I get into the slides. There's a UNLV law professor. He said many investors signed agreements with these. You hear about people trying to sue Robinhood and sue everybody. They have arbitration clauses in the agreement, and that's another talk, because that's my legal hat. But when you sign up for these accounts, please read the fine print. He says that many investors signed agreements when they open brokerage accounts that require all claims to be arbitrated by the Wall Street-backed FINRA, which is the Financial Industry Regulatory Authority, or go there as soon as Robinhood files a motion to compel arbitration. So that means if you have a problem with Robinhood, you have a problem with E-Trade, you have a problem with any brokerage account, you don't go to court. You can't sue them. They have an arbitrator, which is a third party who's going to hear your claims. You can't even send them to court. But again, that's in the fine print. All right, so let me get into it's exactly 15 minutes into the presentation. I'm really stickler on time because I really appreciate you guys joining on a Saturday. So let me get into the presentation here. Let me share my screen. All right, so welcome to the Options 101 webinar. kind of went into what was going on and how we're going to do this. We're going to structure it. I sent out a list of things. I want to just start talking about new people, new individuals being retail investors. Um, if you want to join into this, you can buy stocks, you can buy options. So we'll get to that. But once again, thank you guys for joining us. All right. Here's my big disclaimer. Please read that very carefully. Hire a financial advisor or professional for your long-term investments savings. Options and day trading is very risky. This is not legal or investment advice. I kind of want to repeat that over and over and over. And I'm going to probably put this slide up again before all said and done. Do not trade options unless you can do this. This is one of my favorite books. I'm sorry. Well, it is a book too. It's one of my favorite movies, The Wolf of Wall Street. One of my favorite actors, Leonardo DiCaprio. This is when the federal agent is messing with him, and he said, this is fun coupons. So our group, it's about 40 of us. I want us to look at any of this money that we're investing as fun coupons. Imagine this in your mind when you get into this. If you cannot do this, you do not want to trade options unless you're a professional. All right, how much to start with? Once again, residual income. Please start with residual income. Meals and entertainment. So when I'm an entrepreneur, I'm a small business owner, when I do my taxes, my 1040, I always have to write off meals and entertainment. So I look at that money as, sometimes that's a high value that's a high number for my personal budget. So like I told y'all back in December 2019, I cut that off. I still go out to eat with the family and everything like that, but I kind of try to keep it very frugal. And so no fixed expense money. I mentioned that in the beginning. That's very important. I don't want anybody jumping off the roof like in the Black Wall Street movie. I don't want anybody, unfortunately, it's a kid that killed himself, dealing with this. This stuff is risky. Let me say this. This is gambling without the stigma. I'll be very honest with y'all. I know some of my friends and my panelists may disagree with me. Some of my financial people may disagree with me, but I will stand at the top of the mountain and tell you guys this is gambling. Let's be honest about it. Okay, I can't get to the next slide. Okay, here we go. I'm sorry. All right, I want you guys to look at this slide. This is one of my favorite slides, so I want to put this in there. One of my favorite things I look at. Jeff Bezos, everybody knows him. He's the former CEO, but still runs Amazon. Created Amazon in his basement, sold books, knocked Borders and all these booksellers out the window. And now Amazon is the biggest company in the world. He says, I asked Warren, your style of investing is so simple. Why doesn't everyone just copy you? Mr. Warren Buffett says, because nobody wants to get rich slowly. If you're on this call thinking that you're going to make $1 million by trading options next week, may as well hang up, log off, give me a bad review, everything. Get rich slowly. Get rich slowly. That's the man, Warren Buffett. And if anybody doesn't know who he is, we can do a whole nother webinar about Warren Buffett. But he said, get rich. I like this slide, and I like this quote. I want to start off by saying nobody wants to get rich slowly. And that's the reason why people don't make money and don't last in this game. What companies to buy? So like I told you guys, when the pandemic hit, I got a lot more time on my hands. So what I started doing was I started just researching the companies. When I first started investing, and I told you guys, I invested in Apple because that's what I knew. So I advise, or my opinion, I suggest that if you want to start investing, go look at what you're buying. You go to McDonald's, you take your kids to McDonald's, they're publicly traded. I have Nike's on, Nike's publicly traded. And then you can get into the sectors, which I really like. There are 11 sectors that's normally public traded. I just wrote for the slides, and these will be available, email you guys the slides after the presentation. But sectors is very important. There's an energy, I think about energy sector, oil and gas, tech sector, the tech companies, the big tech companies, Google, Facebook, They call them the FANG companies, Facebook, Apple, Netflix, and Google. All right, and then you have your exchanges, which is really good for new investors. If you say, you know what, Ash, I don't want to do this option stuff. I just want to invest. I would point you to what we call exchange traded funds, ETFs. So that's basically like they're put together in a fund, and they're basically by sector. So you can buy a like a energy fund, and so you're investing. It's not a mutual fund because a mutual fund is really ran by a financial advisor, a financial person. But the ETFs, you can buy ETFs on your own. You can start your own account and say, you know what, I don't know about this. I don't want to be all over the place. I want to buy an ETF in energy. I want to buy an ETF in consumer goods. So ETFs are really good. IPOs. I love IPOs because I've just been looking at I watch CNBC every day, all day. I don't even watch ESPN that much anymore. So they're always announcing these new companies. And another thing that I did was I and I'll talk about this later as far as research, but I got a subscription to Wall Street Journal. So in the Wall Street Journal, every morning, they'll talk about what's going on with these companies. And so IPOs are initial public offerings. These are private companies that are going public for the first time. So they go public, they're raising money. And I feel IPOs sometimes are interesting because you can get them. For example, if you got into the Amazon IPO when it started, I mean, imagine that. But you have to believe in the company. They're very risky. Sometimes they'll raise a bunch of money, go public, and then lose a bunch of money. So they're very risky also, but it's just another place that you may want to start. As I mentioned, the fourth slide says, whatever you use, buy alike. Starbucks. Starbucks is a good company. Buy that. Buy Starbucks shares. All right, the next slide. Research. I was already on it from the previous slide. Every morning, 5 a.m., there's the great show called Squawk Box. If you want to do this seriously, get up, set your DVRs, watch Squawk Box at 5 a.m. CNBC. Everybody has their own thing, so don't go back saying, well, my friend told me, or my financial advisor said he watches Bloomberg, we watch NBC. I watch CNBC Squawk Box. So 5 a.m., I'm on it. And if you're up at 5 a.m., you can text me like, man, did you see that? Okay, yeah, I'm always up at 5 a.m. watch CNBC. Then when I get to the office, I drop my kid off at school. I open up this Wall Street Journal. I don't know if you guys can see, I'm sharing the screen, but I'm sorry. I have the Wall Street Journal, and I don't even read the whole thing. I just read the front page because it summarizes every article. I love it. It summarizes every article that's being spoken about in the paper on the front page. I learned that from an old college professor at U of H. Research. Social media is great. Social media is awesome. You can go on Twitter and follow all of these people that are in finance, all of these people that are trading options, all of these people that are trading stocks. Follow them on social media. Books. I wanted to tell you guys about The Intelligent Investor. That's a book. I'll talk about that later. But I've been buying financial books, trying to read them, use them as textbooks through my research. Groups like this. I really encourage not group think, but group sharing of information. Not groups where it's like, oh, I made this trade. Oh, why did you do that? No, don't. Everybody's new to this. The groups are for sharing information. So joining groups as like this one, join groups on Facebook about investing. Try to get around people that are doing different types of investing too, so you can kind of figure out where you want to get. Classes, take classes. I don't advise. No, I'm not going to say I don't advise you paying for classes because that sounds like I'm hating a little bit. But try to get all the free knowledge you can. Don't pay for class. Okay, I'm not going to do that. Classes, take classes for your research. All right. Buy the rumor, sell the news. Buy the rumor, sell the news. When investing, if you've already seen it on the news, GameStop, it's too late. It's too late. And that's when research, that's why this slide is strategically put here. Because if you've already seen it on the news and it's not CNBC, and you've seen it on BET, it's too late. You missed it. I could tell you about this. This is something I never really realized. But Wall Street is they're very insulated. They don't really like outsiders. But when you think about rumors, I know a lot of you guys may know about Martha Stewart and insider trading. It's not insider trading or anything, but something simple as an earnings call. Peloton did an earnings call Thursday, and we'll talk about earnings later. But they're saying, oh well, we expect to make this much money in the second quarter. That's a rumor. Now, when they announce what they made in the second quarter, it's too late because they've already said it in their expectation. It's a rumor at that point. So always buy the rumor and sell the news. Buying shares. If you just want to buy shares, just choose your brokerage account. Like I said, it's the fun coupon money. If you have a 401k or you don't have a 401k or you have an IRA or you have something with your job, let the financial guys deal with that money. Let the financial guys trade and buy mutual funds, buy derivatives, buy commodities, whatever they do, let them do that with your retirement money. But when it comes down to your fun coupons, you just go online, pick up your phone when we get off of this. If you don't have it, and hit me up. I'm an E-Trade guy, and I tell people all the time, the reason why I'm an E-Trade guy is because I've been with E-Trade from the beginning. It's like this iPhone. Like this iPhone, I got this iPhone in 2009, right after the inauguration, 2010, whatever, and I've been addicted to iPhones. I know we got Droid people on the line. I mean, yeah, go to the Droid. The Droid is better. No, I like my iPhone because it's user-friendly. I like my E-Trade. Everybody was going to Robinhood. Robinhood's good. Robinhood's good. TD Ameritrade is good, and they have others. But I'm an E-Trade guy. So anybody want to trade on E-Trade, give me a call. Options. All right. I think a lot of people are on this call to talk about this subject. Like I said, very risky. Whew, man, it's a headache at times, but it can be good at other times. So just the definition of an option contract in the overview. Every option contract has 100 shares embedded in the contract. So my brother gave me this example about an option. So if you want to buy a house and you don't want to get the house until June, it's February. You pay the person who's selling the house an option price. You say, I'll give you $100, but I want to lock in my price right now. And you're hoping that the house is worth more in June than it is today. So you're paying a premium to have that ability to buy that house in June for that price. So say, for instance, you see a house, you say, okay, I want to pay $200,000 for this house, but you're hoping that it's $300,000 in June. You pay the seller $100 and they keep it. If you don't want to buy the house, you lose your $100. Or if that house, and you're like, I'll walk away, you lose your $100. So that's an overall example of what an option is. It's called a derivative. So you can go and research and Google that. It's actually called a derivative. So you're trading derivatives. So options, when you get into this, they're call and put options. A call options, you're hoping that you hit the price. A put options, you're hoping that the price does not hit. And we're going to drill down on this. This is a bird's eye view of everything. And of course, we'll have a question and answer session. So then you have a strike price, the price you want the stock to reach. So we'll talk about that later too. This is just an overview. The premium, the price you pay for the option to buy. In my example, that $100 you pay for the house. All right, so I'm gonna run through this real quick. I got about 10 more minutes. I want to be on time, and I don't want to waste anybody's time. Hope this information is helpful. We're going to create a company right now called Company A. So I put CA because on the stock market, of course, all companies have a ticker. So our ticker today is going to be CA, and we're going to buy a call option in Company A. Company A today is trading at $10 per share. That's the price of the stock today. If you look at the Wall Street Journal on the New York Stock Exchange, the ticker, it's the price is $10 today. And we're going to say, well, they don't trade on Saturdays. We're going to act like today is Friday. So it's $10 when the market closed last night. You believe Company A will be worth more than today's share price in the future. So you look at this company, like I said, you find your company, you're like, Company A, man, oh man, Company A, by June, by December, Christmas is going to come, whatever type of company you want to make it. I believe that strike price is going to go up. So instead of buying company A today at $10 a share, you say, I want an option to buy company a call option to buy company A in December. Getting it? So, but the person who's holding that company A stock is like, you got to pay me a premium on this. So you want to buy the right to 100 shares of company A at $20 per share in December. So you can call your price. You say when December comes, I want to pay $20 per share for company A. I know it's worth 10 now, but I want to pay 20 now, 20 in December. So some of you may be thinking, well, why do that? Why just not buy 10 now? Because you may not have the capital to buy 100 shares at $10, and you're thinking you really want the price to be like $50 to $60 in December. And we'll get to that later. The holders of the 100 shares of company A will give you the option to buy company A in December at $20 per share. However, it will cost you $500 today for the option. So he's going to charge you, that guy is going to charge you $500 to buy that contract. All right. Call options, company A. December 3rd, $20 call, $5 premium. So that $5, I told you it was $500, but it's really $5. You're paying the $5 premium, but it's $5 times 100 because it's 100 shares. So you're paying $500 for $5 per share on the premium amount. You pay $2,000. That's 100 shares of company A at $20 plus the $500 you paid for the contract. So you're paying $2,500. We call that the break even. You're paying $2,500. See, company A is trading at $100. However, you get the 100 shares worth $10,000. So this is the December. So you wanted it to be $20. You asked them for the $20 contract, and lo and behold, this thing was $100 a share. So it's $100 a share, and you have a contract worth $20. That guy has to sell you those shares at $20 because you bet on it. You speculated in February that it would reach 20, and it reached $100. If that's not cool, I don't know what is or what is not. You profit $7,500 on that trade. So the math is $10,000 minus the $2,500 you paid. That $10,000 is how much the contract is worth in December. But you have to subtract the $2,500 that you put up, that you would have to put up. That's a $7,500 profit. All right. So attack, conquer, destroy. That's how we feeling. This is one of my favorite shows is Billions. We're going to do a podcast, a webinar, that show when it starts back up. You're feeling like this guy. You're feeling like Bobby Axelrod. You're feeling like, oh man, I done made it. This is my first trade. I made $7,500. Attack, concert. He's very excited. Ready. He's mean. He's ready to get back, do another trade. Company A lost. Got to talk about the losses. Can't always talk about the good things. In December 3rd, Company A now is trading at $5 per share, down from today's price of $10 and your strike price of $20. So how options work is pretty cool. You just lose your $500. You don't lose any more. Options are cool because you can set in your loss. So you speculated that it was going to be 20. It never reached 20, but that guy's not going to give you your money back. That guy, you paid him that $500 premium. That's it. You lose. It did not hit your stock price. You lost that money. You feeling like this, man, I messed up. I lost $500. I can't believe I went to that webinar. This dude from New Orleans telling me how to risk my money and I lost $500. Don't be mad at me. I told you, when this happens, you get the Bobby Axelrod, now you got Malcolm X. Company A, here's the good news. If you purchase that contract today at $500, this is great about options. Someone else may come along because it's a community of traders and investors. Somebody may say, oh, I think that company is going to be $30 in December. You think it's 20? Let me get that contract from you in next month, and I'll give you $600. You can walk away with $100 and you're done. You don't care what happens. Walk away, move. You made $100. You out of it. You made $100. You can always do that options contracts. That's what I like. Give yourself more time. Give yourself time See where the stock is running. Do your research. Watch the stock. If you see that price going down, try to recoup some money. Don't wait all the way until the end and you lose your entire premium. So, and another thing, if the stock price is going up, you may want to just take your money because you still have a lot of time. Time, it's called like the time value is still in that premium. So if it's still in December and the stock is going up, of course, somebody's going to come along and try to give you some more money if the stock is going up. But come July, that stock may tank again, and you missed out on the opportunity of getting out of the trade. The contract must always have value. Company A call recap. Your research is right and the stock goes up, good. If your research is wrong and the stock goes down, that's a bad sign. But you have that safety net. You can sell before if you want to take profits. You can sell if you see it falling to protect your losses, what we discussed before. The most you would lose on Company A option is $500. You'll be looking like Denzel and Malcolm X, but that's the most you could lose. But it's limited on what you can gain. That's the beauty behind it. But it's gambling, it's speculating. Company A put. We talked about puts. Puts is kind of like what they've done with GameStop with the shorting, selling, and all that. But puts are basically, it's the opposite. You actually are saying, I know that company is going to be trash in December. I want to buy a put. So it's the same scenario. However, you are now hoping that the price goes down by December 3rd. You're willing to pay a premium. The premium now is different. Puts are different of $100 today, hoping the price goes down from the $10 price of today. If the price is zero in December, the contract seller must sell you the 100 shares at $10 per share. So then that's how you make money on puts. I'm not going to go deep into puts because I don't like puts. I don't like betting against the stock market. I don't. And, I just don't do that. But a lot of people do it because you can hedge it. You can buy calls, buy puts, whatever you want to do, you do it. I'm just giving you an overview. And hopefully, if you're interested in puts, we can talk about puts. You could be the put person in the group. All right. That's how I look at puts. Like I'm like, that's another one. If y'all know me, y'all know I like Curb too. So I had to, when I decided to do this, I wanted to put my plug for my shows. But you're looking like Larry after the put. That's just how it is. I don't get it. I need a put master. Option analysis. Very risky, euphoria. You can make quick money. Can establish a nice portfolio with margin. Now, I want to speak a little bit about margin, which I don't want anybody to trade options on margins, but I want to let you know what it is. Some of these brokerage accounts will give you about $25,000 of cash to trade. And a lot of people use those trading options. Very, very, very risky. I don't advise it, but it's a possibility. If your stock price hits and your contract hits and you have to buy the 100 shares, you can borrow that money from the brokerage. They'll put the money up for you, and now you're holding 100 shares of the stock. We'll drill down on margin in a more advanced course, but I just want to give you an overview. Like I said, I'll give you the slides, research it. If you have questions, just send me an email. So I'm gonna give y'all some personal information. This is my Zoom option trade. I'm gonna run through it quick. I had a September 4th call option on Zoom. The call was for $395. It cost me $125.51. My break even was $407.50. I sold this contract before the expiration date. Somebody paid me $4,829 for the contract. I don't know what happened if I would have held it, but that's my success story, right? Now, I want to put this out there, but I also wanted to show you this. AstraZeneca. I've been chasing the vaccine stocks since the vaccine talk. AstraZeneca, Moderna, all those stocks, they can go to hell in a handbasket because I've had bad luck. So if you look at the slide, I'll send it to you. I tried to buy an option. I lost on this one. So I could show you all of the Zoom and all that, blah, blah, blah. But here's the one I really want you guys to pay attention to. The expiration was July 24th, 2020. I thought that this stock was going to be $61. Today is $49.78. It never got to $61. Today, February 6, 2021, I Googled it 3 o'clock this morning. That stock is $49.78. In July, I thought that it would get to $61. I lost $691.05 on that bet. So that's the dark side of this. So the GameStop phenomenon, real quick, I got 4 minutes. Hedge fund guys, they wasn't really trading. Well, we were trading options on GameStop, but the hedge fund guys is basically they borrowed shares of stock from these brokerages. They're like, all right, I want to borrow your shares of GameStop in October because I know in January GameStop gonna go bankrupt and the stock price is gonna go down. So that's called shorting. When you borrow shares and you want to, because you're borrowing them, you got to give it back to the guy who you borrowed them from. But whatever they're worth at that time, say they were worth $15, they're saying, oh, I know GameStop going to be worth $5. So when it's time for me to go back and give this guy his share, I can go sell them for $5 and I'll pocket the money. So that's what short selling is. It's basically you're betting against the market, just like puts. You're basically saying in 6 months, this company is going to be trash. They look at it company-wise. They're not looking at it by the stock, which is the stock represents the company. But these guys have done heavy research saying GameStop is going to be trash, AMC going to be trash, BlackBerry is going to be trash, Bet, whatever. All these other companies, all the companies were supposed to bomb. But of course, people like yourselves, energetic young people that are on Reddit, they were saying, we hate Wall Street, we hate hedge fund managers, we hate people that bet against the market. We hate people that bet against GameStop because we're gamers. We play the PS5. We play Fortnite. We're going to all get together and run the stock price up. And that's what they did. That's what they did. But what people don't realize, I was reading an article, I posted this on my IG. It was people that were hedge funding on Wall Street that did the same, that bought options in GameStop. They bought options in GameStop. So they were getting paid too. But that's the short squeeze. The short squeeze is basically when those guys, those hedge fund managers borrowed those shares, they couldn't sell them. So they had to, and so the guy they borrowed the shares from, like, man, I want my shares. They couldn't sell the shares because nobody wanted to buy them. So they couldn't sell the shares. So they were just out of luck. And so that's called a short squeeze. We can get deeper into that. Also, if you had any questions, just send me an email. What now? Okay, that's the GameStop trade. So I just want to kind of got lucky. I got in GameStop on January 22nd, 2021, because I was on CNBC Squawk Box that morning, and they said something's up with GameStop. Rumor, bought it. Got out of the stock that same day. I didn't even got out of this contract. This is an option contract on GameStop. I'll send this to you. But I don't even want to know how much money I could have made, but I got out of the contract because just something was telling me that don't ride this. Don't follow the herd. Get your money and run. Get rich slow. And so I got on GameStop January 22nd. I was out of it before all that stuff happened. My options trading rules. I came up with this in probably right when I started trading options. Y'all, I'm going to share this with y'all, but I don't even follow this. My options trading rule. Be willing to lose the entire investment. If not, do not buy. Take your profits at 50% gains, run at 50% loss. I totally don't do that. Don't look at what could have happened. Don't look at what could have happened. Have fun. No stress. Stress leads to negative emotions. Don't stress out while you're trading. Don't go on the internet and listen to people. Don't listen to any negativity while you trade because it's just going to mess up your mind. This is a psychological game. It is definitely a psychological game. Speak positivity over all your transactions. Allocate 10% of your profit to long-term debt every month. That goes back to budgeting. When you're making the money, it's like going to the casino. You go to the casino, you win $1,000. Oh, I'm gonna go back to the casino tomorrow. No. Take that money that you win and either go pay off your debt, go take your family on vacation. The money that you use, put it to work for you. Start a business, do something like that. Trade in a quiet place, no outside distractions. Have a well thought out plan, no room for mistakes. What I want to encourage you guys is to make sure that you have a plan and you do what you want to do and you get information from me or information from the newspaper, information from everybody else. Do not take advice from anybody about what stocks to buy. That just does not make sense unless that financial person is your financial planner. Rule number 10, execute 1 and 9. That's it. So adventures begins. So let's all start trading. If you've been trading, let's continue. Let's work together. We have about 50 people on this webinar, and it's been fun. It's been fun talking. I'm going to open my panel up. I think I have, let's see here. Yeah, I have 2 people on my panel. Oh, I'm sorry. Got to plug myself. It's my last slide. Got 20 seconds. Look at that. Please follow me. If you don't, follow me on social media. Those are my 3 social media accounts. I will be doing this often. The next one will not be about options. We're gonna be passing information. We're gonna be a community. We're gonna establish our own Reddit mob. We're gonna be talking about small businesses, how to start businesses. We're gonna be talking about movies. We're gonna be talking about books. We're gonna be talking about Black Lives Matter. We're gonna be talking about anything that's hot in the news. We're gonna be talking about it. I'm just so excited about this, but I need you guys to join. I need you guys to share as much as possible. This is not financial. I'm not charging nobody, nothing ever. This is just something that I want to do. I feel I'm called to just spread all this news and knowledge that I have, all this new information for people to make money and to set themselves up and have financial freedom, but at the same time work together and just know what's going on in the world, and to know if we were all doing this, we could have all gotten GameStop on the 22nd. So that's all I have. I appreciate you joining, and I will stop sharing and I will open this up. Yami and Ray, how y'all doing?
Doing good, man. How about you? You did a good job, man. You did a good job.
Minutes.
Yes, good job. Ashton, turn my video on.
I can't turn your video on. You have to
You are the one who stopped it. So you have to. There we go. All right, guys. Yes, that was awesome. Thank you so much. Thank you so much. And, one thing I want to say is Trey and I, we've talked about this. Ashton and I have talked about this since the beginning of the pandemic. We'll just kind of get together and shoot some different ideas back and forth. He's more on the option side. I do more actual stocks and working within the space of the earnings releases. And so I just love that we're coming together as a community to do this, because the same way Ashton adds to me with the options and bringing that different angle to me, I bring him a different angle where it comes to earnings. And so, being able to bring all this different information together, now it's I have so many different strategies. And one of the conversations that he and I have had consistently is around, we need more Black people doing this. We need to get into this. This is like a secret that's being held, and we don't have access to it. It's not that difficult. And you just got to really just take the first step and get involved, and then you can just start making money. So just a couple of comments on, what Ashton said, just to kind of follow on when he was talking about with the savings and creating a budget. One thing that I did at the beginning of the pandemic is I always call it just kind of building capital. As you take one of these options, because it is easier to get into the market with options because of the lower price point. And, you take that $50 contract and you make $20. Now you got $70 to reinvest. Start to reinvest your money. Everything I put in a set of money at the beginning of the pandemic, and I have more than doubled that. So it was to take that time just to build capital, so that way I can continue playing in the market. So that's one thing to do. Just keep reinvesting. Like he said, this is a lot like gambling, but one thing I will say is that the house does not always win, right? So it's whenever you go into it with that spirit, knowing that, okay, you might lose. And and Trey, I love the way he handled it. Don't listen to anybody who doesn't tell you about their losses, because you will lose. And so you have to be mindful of that and be realistic and be prepared to lose. But then it's just part of that strategy. You're going to win some, you're going to lose some. Hopefully you win more than you lose. And take it slow, be methodical. Anytime that I try to make quick money, I will lose. I mean, so it's like I get upset and I'm mad and I'm sending him messages like, what this, but it's like, slow down, take a breath, and then start to, be more methodical, be thoughtful about your decisions. And on the news, it's like, buy the rumor, sell the news, but I also say use the news. The same way, Ashton was going in with the vaccines. As soon as you start to hear stuff, the minute the pandemic struck, I went out and bought a funeral company, bought stocks in funeral companies. Like, and right now we know okay, now that the world is about to open up, start looking at the airlines. Start paying attention to what will happen in the future. People are at home, exercise equipment. Like anytime you hear information, when Southwest started having problems, this was a couple of years ago, I'm like, Southwest is a solid company. Yes, they've had a couple of big issues and the stock took a hit, but it's a solid company. When it takes that dip, jump in at that time. So use the news to also start thinking ahead, be strategic about where you're going with it. And one thing I'll also say about the 401k, I, obviously let the professionals do it. But one thing that I did with my 401k as I was getting into the market was that I used it to feel the market out. Like I was like, okay, let me do the conservative and put all my 401k in large caps. And then I looked to see what made up the large cap fund. And I noticed that, okay, in this fund, I didn't really make a lot of money. Why? Because those are almost too stable. So if you're trying to make money and grow money, you don't want to go for the super established companies all the time. A lot of times it's better to go for the smaller ones that are less known. Then I flipped my 401k over to the more risky side, and I saw what they were investing in it there. So I was able to use it in a safe way just to get a feel for the market so I could start understanding, what's out there and how the market is moving. And do I look into foreign investments? Do I go after the large caps, the big companies? Do I stay with the small companies? Are they growing faster? So that's one way that you can actually just kind of start to get a feel and start to understand where your interests will lie.
Nice. Thank you, Yami. Thank you. And Yami's in New York. So I just want y'all to first name and where you live, like Yami, New York, because I'm saying this is just a new community.
Right. You're right.
My man, 50 grand, Ray, my man from high school. We McMahon Mustangs. I don't have any McMahon gear to amp up on this deal. But Ray, you got the floor.
Good. Well, man, sorry about my lighting. My office is super dark, but I'll do better next time.
Looking like one of those Reddit traders, man, where you don't want us to know who you are.
Dude,
I'm silhouette challenge.
I know, man. My office, I'm like in a little dungeon in here, man. I'm trying to run like 3 businesses out of this thing, so it's crazy. But it's all good, man. Like I said, you did a great job, man. I appreciate you bringing me on as one of the panelists. But I don't want to take a lot of time, but I don't do Forex yet. I'm an options trader too. So no, that's good, but I just want to let you know that. But what some of the resources that I like that are free, we talked about that, is www.optionalpha.com. The guy on that site is Kirk Duplessis, and he does a really good.
Put that in the chat if you don't mind.
Yeah. I'll drop it in there, and I have a couple other ones too. So he has a system called Baby Steps, and my 10-year-old has gone through it. So, I mean, it's really good. Probably the best free information you can get on options trading that I've seen. Then you also have Tastyworks. They actually have like a TV program through the day. So if you got a few minutes, you can chime into them, watch them and check out what they're talking about. And they strictly do options trades as well. And then the next place for pretty cheap training, like I do all kind of stuff on this site. It's called Udemy, www.udemy.com. I'm trying to learn Solidity, I think it is, the Ethereum code. So I'm about to start taking classes in that next week, trying to get into the crypto space and stuff like that. So, but there's all kind of options training, technical analysis and stuff like that on there that you can get for like $20, you know what I mean? So you can exhaust all of your free resources first before you go to looking for any kind of a paid programs. My strategy for options, like I do a lot of different stuff, from selling naked calls and puts to doing iron condors, iron butterflies. So, the key thing I think is to get the basics down, like you say. So once you're familiar with calls and puts, every other strategy builds from those. So you either be doing multiple calls and multiple puts, selling one and then buying another one to protect, or vice versa. So that's another big thing. But Ashton, I was about to call you Trey too, but like Ashton was
Oh,
saying,
I'm still Trey.
Like he was saying,
for 20 plus years.
I know, man, but it's like there's so many options, literally with options trading, man. I get excited about it because you can take, I'm in a group and a guy sent me, hey, look, you should look at this on what is it, Space? And he's like, you can buy 200 shares of this company and sell calls against it. I'm like, that's good, but I'm like, I have a strategy. They call it a poor man's covered call or diagonal, where I can control 500 shares and sell contracts weekly against that. Whereas so I very rarely buy actual stocks outright. I might buy a longer term, a longer dated option and sell shorter term options against it. So I do, stuff like that. So, man, I love it. I love it. I'm like you say, you guys say any investor who says, or any trader who says they don't take any L's, like you said, run away from them. Because we're all taking L's. It's just trying to minimize those losses. And like you were talking about, one thing I had to learn later on is about the stop losses. Man, when I get into trades now, I know when I go in how much I'm willing to lose,
right.
And I set my stop. So it's an order that says I'm willing to lose. I might put up 1,000, but I'm willing to lose 250. And then if it doesn't go my way, the 250 comes, it hits my stop, and I'm on to the next trade.
Like
and that's one thing that's important because I've had times when, like, especially during the beginning of Corona, where I didn't set stops, and it is very uncomfortable. Yeah.
So, I'll hold over the weekend.
Yeah, man. When you put a trade on and then an hour later you're like, man, I could have bought a car with that. You know what I mean? That'll hurt your heart. So you don't want to be in that position. So from now and that's the other thing too. Like I really like selling options because the probability is usually in your favor. You'll find that when you go through the option alpha stuff. But when you sell it without protection, it can hurt you.
Gotcha. That's good, man.
Yeah.
That's good. So I went to high school with Raymond. I went to undergrad with Yami, man. I'm feeling very nostalgic. And my nickname Trey, man, almost everybody on here knows who I am. I might have some guests to the guests. The guests call me whatever. I think I'm gonna go back to Trey for my options trading.
Why not, man? Why not?
So I want to open up to questions. Everybody, the attendees, thank y'all for joining. I wanted to keep this an hour, so we have 8 minutes left. If you guys can post whatever, Ray is posting his great websites in the chat. Okay, thank you, Ms. Watt. I can answer them live. Anything that we missed, anything you want clarity on?
One thing I wanted to just add is that as far as training, the different platforms also offer training. And also you can go on YouTube. So there's a lot of different ways that you can get information and get good training out there. So like E-Trade or Ameritrade has some really good tools. E-Trade actually has a tool called Paper Money where you can start like just practicing trading. So like there's actually a lot of different types of training out there.
Yes, I'm sorry. Yami, I wanted to put that in the slide. I was too busy looking at my Curb Your Enthusiasm. Paper trading, guys, please paper trade. And what paper trading is, it's basically you can go on E-Trade, my baby, and yeah, paper trade is basically you're trading not real money, you're trading monopoly money. So you can go on E-Trade and open up a paper trading account on one of these brokerage firms, and they'll give you, they'll probably give you $1 million. I don't see why not, because it's not real money.
Yeah,
so,
TD gives a lot of money. Yeah.
Huh?
TD Ameritrade, you can reset your amounts and all of that.
Yeah. So go to TD Ameritrade, set up an account, and paper trade for about a month before you really get into it. I really suggest that. Now it's gonna be a lot of what they call it in the game, y'all, FOMO, for fear of missing out. That's why I don't want to paper trade, because if I make $1 million on a paper trade, I'm like, man.
Like I didn't make that in real life.
Yeah. But the other way too, you can lose $1 million, and then be like, damn, I don't even want to trade this. But yeah, paper trading, guys, is basically a concept where they give you money just to play around with, basically. and you establish your account just like it was your money. It's fun.
And you get to
this is fun, man. Like I told y'all, like cutting out on the meals of entertainment. You can ask my wife, man. I'm on CNBC. I'm on my phone every day, all day. You know what I'm saying? I got to make sure she don't think I'm on Pornhub or something. I'm on. I gotta let her know I'm on Wall Street Journal, like researching companies.
That's a much better addiction to have.
Everyone has his own vice, and you know I'll talk about addictions in the future webinar. So y'all are posting these questions in the chat and not the Q&A. Okay. Other than Robinhood, Ms. McKnight, other than Robinhood, can you recommend any other apps that are usually friendly to being traders? Yeah, I recommend E-Trade, Adria, and I can I'm sorry, and I can walk you through it. Just set out some time next week. I really like E-Trade, Yami, right?
I'm an E-Trade person as well. I started with Share Builder. I went to TD Ameritrade. Now I'm with E-Trade. I mean, to me, they're all it's Share Builder was like bare bones. You didn't get very much out of it in terms of like research, et cetera, which I don't even think they're around anymore. But so E-Trade and TD Ameritrade. I think TD Ameritrade actually probably has more tools, but I use E-Trade. It's easier for me.
Right.
I went TD Ameritrade. I use the Thinkorswim platform. So once you start getting, a little bit more advanced with what you're trying to do, it's really good. And like you said, you can get that paper trade account. And you get your regular account, but then you can kind of switch back and forth. So you can test things and all that in the paper trade and see how different strategies might work. But I really like TD Ameritrade. So I mean, but it's what I know. I'm trying to get really, really deep into doing this with a lot of the screeners and the technical analysis and stuff like that. So I like the tools and that I can grow into being able to use them.
All right. So we have another question, Miss Manuel, another McMain Mustang. Will all of these platforms require your social security number? That's what stopped me from joining Robinhood a couple of years ago. So Molly, I think the reason why is for tax purposes. And that's a great question, because that's another thing you got to be wary of. I know a lot of people, and check the news on this, and I'll send this out. You get 1099s at the end of the year from these brokerage accounts, because you have to because it's ordinary income. And so you have to report this money back to the IRS. So I guarantee y'all, I'm telling y'all, there's going to be a big deal where a lot of these, I'm pretty sure younger people that are making all this money off of GameStop, they ain't going to pay their taxes and they're going to go to jail. Watch.
Yeah. So, and to that point, as you are trading, it's good to stay mindful. Like any trade I make, I set money aside immediately out of that profit of 15, what is it? Short-term capital gains. If you don't hold the stock for a full year, it's 15%. And I think if you have it for longer, no, I think it's 20%, whatever. You have capital gains. I'm not going to start lying to you, but I have it set up in a formula where I just deduct, immediately how much money I'm going to owe in taxes on what I've earned. Mm-hmm. So just be very mindful as you start making money. We're going to go ahead and speak that into existence.
That's good. Okay, I'm gonna run through the questions. I see, if y'all don't mind, the chat is popping. Can y'all put the questions in the Q&A? It's two separate screens, I believe. Sorry. Okay. Chantel Bell, another McMain. Oh, my McMain people. What do you think about SoFi and stockpile for ETFs? I'm trying to get my kids involved. I'll defer. I don't really do a lot of ETFs.
My kids have stockpiles. Both of my kids have stockpile accounts. I think my son might have one ETF in there, but I like it for being able to, them to be able to get access to regular stocks. So like my son has Teslas and I don't know, Zoom, all those different ones in there. I want to say in the past 2 years, he's up like 187%. So, ETFs are available in there, but I do like stockpile for the fractional shares. But they have ETFs, but for me, I'm like, if I'm gonna be in there and I can get fractional shares, I want to try to get fractional shares of high flyers, but that's just us. But they have those too.
Gotcha. Good. I hope that answers your question, Chantel. If not, just send us an email. What's the green? Well, I'll send you a text message, email. Sorry, Chantel, about I know we have some kind of green credit card for the kids, but I don't know. For us non-risky folks who are crawling before they walk, Man, y'all kids with these text message acronym like BF. I'm sorry, for us George Miles, my boy, for us non-risky folks who are crawling before they walk, what do you all think of ETFs? I think they're good. I think they're awesome, especially if you're just starting. I mean, as I mentioned earlier in the presentation, you can get a tech ETF, and I mean, think about the Robinhood. Something GameStop probably was in an ETF. So you're limiting your risk so much with ETFs. But of course, you're not going to get this game is risk and return, supply and demand. So you're not going to get a lot of money off of ETFs like you can get betting on options on individual stocks. You have something to say about ETFs, Yami?
I will say that is how I started. I would actually just, I would just do a $500 or whatever the number was a month and just buy ETFs. That was like my very first introduction to the market was doing that, like just kind of creating a savings account with my ETFs.
Good. Um, quick quick lesson on you on E-Trade. It'll probably have to be another one, Shaf, and I'll send you an email. She wanted to do a quick lesson on using E-Trade.
Manny's question about if I wanted to take all my capital stock out of Merrill Edge and transfer to TD Ameritrade, can I do that without selling my shares? Absolutely. And I was actually I rolled over my IRA into one of my accounts so that way I could use that capital to for a margin account. Like I know Ashton has that on the agenda for another time, but you can do that where you just roll over the account. No issues, no penalties, whatever. You can just roll the account over.
Diallo Smith, my man Diallo, he asked for what are ETFs? Exchange traded funds. Anybody want to go into it? What they actually are? That's a good question.
Yeah, it's just like an old school mutual fund. So like what happens is they decide to invest in whatever group or sector of stocks, and they buy, say, multiple companies. So instead of having one company like for tech, instead of just having Apple, you have Apple, you have Amazon, you have Google, you have all of those in that, and Facebook, all of those FANG stocks in one pile, and then they just buy a certain amount of shares of those. They put it in one pot, and then they sell stocks against that. So instead of you having shares of a particular company, you have shares of fractions of multiple companies, if that makes sense.
Yeah.
And it's safer because it's diversified. So where one stock might go down, another company might go up, but in that whole pile, it ends up being, they kind of balance each other out. So that's why they're a little safer.
Yeah, that's good. So they, Diallo, they basically are like Ray said, mutual funds, but mutual funds are like managed by fund managers.
Yeah, and they settle at the end of the day, mutual funds. So you can't actually trade. Like right. we can do all kind of options trades on ETFs, and they're real time. They act just like a stock with that.
And Diallo, you might want to look at this. Great question, by the way, my man. Thank you. You might want to look at the triple Q. The triple Q, QQQ is the ticker. The triple Q is the NASDAQ, the tech ETF. So they have like all these great tech companies. And I want to read something that I had in my notes. It's worth pointing out that while the S&P 500 added an impressive 16% last year, the NASDAQ 100 index of the top 100 US companies listed on the NASDAQ stock exchange rallied a tremendous 45% in the same period. So the S&P 500 is basically an index of all of these 500 companies. So you see that every day when you look at the Wall Street Journal. It's like, what is the S&P doing? So that's how you kind of value the market, because like the Dow is 30 companies, the S&P is 500. So this QQQ, so I'm sorry, the SPY, you can trade, like Ray said, the SPY. So Google, not Google, but write down in your notes, SPY. If you're interested in ETFs, write down SPY. So what you're doing when you buy SPY, the stock, or even the option, you're investing in those 500 companies. It's an ETF based on the S&P 500. So when you wake up in the morning, when y'all get up and watch Blockbox with me, you're looking at the S&P 500 all day, because as that moves, your ETF moves. And so the triple Q, the NASDAQ is the tech companies. So that the triple Q is basically all the tech companies, and it was a 45% return last year. So like Yami was saying, you look at that as a savings account. You know how you put And I'm glad you brought that up, Yami, because if you put $5,000 in your savings account and you don't look at it, or you buy my mom did T-bills, bonds, or even CDs, you could put $5,000 in the NASDAQ and you'd have made 45% of your money last year. So good question,
Hey,
Diallo.
we're gonna have to talk about crypto too at some point.
Yeah, somebody else. So Diallo asks a question, for those of us with money available to invest, how do we figure out the best way to invest and how much to risk when we are just starting? Yeah, I think it just depends on the person. I think it depends on, like if you looked at the slide, like, and we talked about, if I'm going out, see, now you got me being personal, Diallo, good question. If I'm going out to the spot or to a bar and I'm spending $150 on drinks, then I know Monday morning when the market open, I could spend $75 on an option contract because the options are really risky. But if I lose the 75, I mean, I would have drunk that away anyway. So I think ETFs and trading stocks are boring. I think that's boring. I'm more, like Ray said, I'm more excited about the options. And like what Yami does is trade based on earnings. She's day trading. None of us, even though I said get rich slow, all of us, the three panelists, we're trying to get money quick based on the stock market because we see the potential, but we also know it's risky. So we're not investing our kids' college funds. Like I said, I promise y'all, I'm going to do a webinar on budgeting. And I think Diallo, please join that. Please join the panel because I think if our people, us, just not just us, Black, just everybody, if we just budgeted more in this time where we're going, because I really do feel everything is cyclical. I feel like I don't think the bubble is going to burst with per se, but I think it's not going to be as good as 16% like last year. So
Yeah, as there's so many people in the market right now. So and it's because of our current circumstances, which is, why as soon as this hit, I perked up. I'm ready to go. And like they say, it's exciting. For me, it feels like because I trade around like Trey said, I trade around the earnings season. So, if for instance, Ford released their earnings on Friday and they said, and the thing is, it is gambling because then like, all right, I have to figure out, are they going to beat the estimates? And then if they beat the estimates, are they going to sound positive enough to make people feel good? So the price will go up. And so like, I might buy it a couple of days in advance, at $11, hoping that after good news, it'll go up to $12. So then, so you up there and I saw somebody said something about it being a full-time job. So sometimes you really are just sitting in front of your computer, waiting to sell, waiting to buy, figuring out what is going to happen. So, it can be a lot of excitement around making that money. But I think also though, it is about being methodical and being thoughtful. Even though we are kind of, hustling it a bit and we are talking about taking it slow, it does involve quite a bit of time and being methodical about it.
It does. It does.
I'm totally opposite because when earnings comes, I'm trying not. I don't like trading around earnings. So like my I sold a put every week in Tesla, and when they had earnings the day before, I bought my put back at a profit, and then the day after earnings, I sold another one. So like I don't fool around with earnings at all.
Yeah, I mean, I think with the earnings, and this is kind of a tangent, I'm sorry, guys, but I think with right now with the earnings and reason why it's going down is I think it's really like buy the rumor, sell the news. And I think the price is already in. Y'all got to realize, man, if you go back and look at how much these stocks were in March and look at it now, they've run up so much. I mean, how much do they have left?
Right.
They run like Apple and Peloton and Netflix. They were, man, Peloton. I even think Netflix was probably double digits in March. Like these companies were so with earnings now it's like, what's the big deal? Let me go. And now everybody has that philosophy, I believe. I mean, like you said, everybody's in the market. Like, okay, earnings run up. Me, Kali, and Myron and Rob talk about this all the time. That's my boys that we have another group. We talk every day. It's about like the earnings run up, and it's real, and it's one of those things where when you get in this game, that's why I'm so motivated. We got to continue to share information. Like, oh man, Peloton's about to release their earnings. Let's get it. Nah, but I don't know about the shipping. I don't know about the supply chain. Stock went down. But before that, Peloton went to the moon.
Yeah, you can't. Well, and that's the thing. It's like you ride the. It's not necessarily about even holding that stock or even waiting for them to release. For me, it's like I'll catch and exit strategies. Like you said, set your stop for when you're going to have losses, but also don't get too greedy. So if it has a run up and you can take the win and bounce before the news or the sentiment hits the stock price. So.
Yeah, that Peloton was nice though, because I lucked up and was doing research because I'm trying to improve my TA, and I pulled up the Peloton chart yesterday and got a quick little snipe on that one. So after it took that big dip, it gained some back, it hit support and kind of bounced back up a little bit. And that one was nice yesterday.
Boy, I tell y'all my Peloton story on another date. I should have 5 bikes in my office, as much money as I could have made on that stock. I've been riding that stock since March.
Yeah.
And just hadn't been one of those things. Is I should have just been gaining shares. I'm trying to do the options, but I should have just been buying the shares.
What do you when you buy your shares? Are you buying out of the money, or are you buying at the money, or in the money?
Oh, it depends. I think you bringing up good points, and I think that's going to be for a later.
Okay.
But yeah, it depends.
I just don't like the pop. I don't like the probability of profit on those out of the money options, man. I just so when I go in, I try to go in the money. It performs more like the stock. But when you want to talk about gambling, when you're buying those out of the money options, the price has to not only meet your strike price, but it's got to go up above, so to make up for what you paid for the option before you start making money. I mean, and that's a lot to ask.
AstraZeneca. But I'm buying AstraZeneca thinking, they're about to release a vaccine. It's going to the moon.
Yeah.
But the good thing I will say, we'll talk about it a little bit. The real thing I do about out the money. So guys that are new to options. So what Ray is talking about is, in my example, in our company CA, we could buy contracts in the money, already saying that it has already hit that stock price. Or we can buy it out the money saying, okay, in December, my example, in December, it's trading at $10 now, but in December, I'm gonna buy it out the money for $20. But what Ray is doing, saying, I'm just gonna buy it for $10 today for December.
Or I might buy that. I might buy that. I might buy that 8.
Right. But that's a lot. So but here's the thing: the reason why I buy out of the money, because they're cheaper. So you're risking a lot, but you're not putting up a lot of money, because even if you buy in the money, it could go down to 5.
It could, but think about it this way though: if you buy out of the money so far, I mean, the probabilities say that you're gonna end up with most of those out of the money options expiring worthless. You know what I'm saying?
I have a question. How far out do you guys get your options?
It depends. It depends on what I'm trying to do. So I have some where I might go six months to a year. Like I have 4 contracts. I have 4 contracts that were like almost a year out. I've been waiting on for it because I believe in their fundamentals and everything. So and I know they're making money. They're just not. People don't know that they have cars that they have EVs. Like a lot of people don't know that. So I'm like, when those cars start hitting the road, I mean, I really feel like they're gonna pop. So like I was buying 50 to 100 contracts. I might buy the 7. It was trading at 10. I might buy the $7 strike. I might buy the $8 strike. The only ones that I lost on recently was I think I had $10 strikes in January, and it hadn't started popping yet. I just missed it. But yeah, so I might go 6 months out, 8 months out, and then if I have like stock, Ford is so cheap. I don't often sell calls against it. But if I have something that's a little bit more expensive, I'll buy 6 months out to a year out. And I'll sell weeklies out of the money. I'll sell out of the money weeklies against it, right? So like we're talking about, Trey is buying those out of the money options. Mm-hmm. I'll sell them. I'll have the underlying options. I'll sell them because the probability of their profit is low a lot of times. Like I'll sell options that are that have a 30% probability of profit against the ones that I have in the money. So 70% of the time, I'm just taking money weekly, right? Now I might get to a point in that 30% where my shares get called away. No problem. I made money on a run up to whatever that strike price was. And if they get called away, they get called away, it's all good. I just let the contracts go. So that's how I approach it. But I mean, I know people who do make a ton of money doing the out of the money stuff. It's just that the numbers the the number, if you got some solid technical analysis and you can play them, they will really work for you. But the numbers, to me, I don't like them.
Let me tell you. All right, we're gonna have to do another options webinar because what you're saying, everybody, and it's the beauty behind what you're saying is everybody got different philosophies.
Exactly.
Yeah.
You know what I'm saying? Everybody, we talk about that on our chat all the time, man. You know, but it's good because now we all get together. It's 40 people on the phone. We all get together. We got 40. I mean, it's gonna all work. Something's gonna work.
Something's gonna work.
Yeah.
It's like that natural diversification that happens when you bring different people together.
Yeah, exactly. And so what I would say is how I look at you asked me why out the buddy. And Khalid, if he's on the phone, he's gonna laugh. We call it throwing the yo. Sometimes you walk in the casino and the worst thing you could do is and say, I'm gonna roll this and hit an 11. But the 11 got the best odds. But they got the best payout. It has the worst odds, but the best payout. Sometimes I just want to try to get the 11. Sometimes for the home run. But I'm gonna cut it. My wife had a question. She asked for you, Ray, and Yami, as I shared my social media to close us out. If y'all could post y'all social media, and I encourage everyone on this call to follow Ray and Yami on their social media accounts. If you guys could just post that in the chat.
I'll drop it in there. I'm gonna drop the Lanyard Investment Club deal in there because I don't really do a lot of social outside of my basketball stuff.
Well, you be on Facebook every day. What you talking about?
Well,
I don't put investing stuff either, but you know what? I might need to start because this is, put your money where your mouth is. I'm always talking about helping
you gotta do Instagram, Twitter. Twitter is the best in my opinion. But
man, I'm not on the Twitter, man. I do IG for my son and for the gym, but for myself, man, I'm way behind on that. But I got to get it right. I'll get it right.
Okay, so look, let me. Damali had another question. This will be the last question in case unless somebody had another one. Explain this in the money, out of the money. Did we explain it? Damali, can you just say yes or no in the chat? She wanted to say, explain this in the money or out of the money, or is it easy enough just to Google? We don't want to, I want to make sure we answer all the questions. I want you to have to go to Google because that's what this is for knowledge. So in the money, today with our company, our fictitious company is at $10 today. Ray would say, I want to buy December $8, which he's saying that company is going to be more than $8 in December, and that's in the money because it's already 10. Out of the money is when I say $20 in December because it hasn't reached that. So Ray is like, I'd rather do that because it's more of a probability that it's going to hit $8 than 20. So $8 in the money, $20 out of the money.
Yeah, it's actually like you're buying. For me, options provide a lot of leverage, right? So if the stock is trading at 10 and I buy an $8 call, it's almost like right there. It'll probably be at about a 70 delta or something like that. So it's almost like I own 70 shares instead of owning the whole 100 if I would have bought it at 8, right? So for me, it's a stock replacement kind of strategy. So like I don't have to spend as much money to buy all the shares. I can still get the benefit almost of owning shares, but I do it through the stock. So that's why I like to buy in the money, sometimes right at the money. So at the money would be like 10, right there. If you're right on 10, that'll be kind of considered at the money. But in the money, I go in, I might buy the 8 when it's already trading at 10.
Yeah, I'm checking the chat. Yeah,
we do need to have another one because I want to talk to y'all about strangle and straddle calls.
Yeah, man. You sell strangles or you buy them? You sell them or you buy them?
Y'all got to buckle up for the next options class. I mean, and that's we'll have we're gonna end. I want to thank my panelists for being here, man. Y'all really, really, really helped me out. I really appreciate it. And thanks for everybody that attended. And please fill out the survey. Please, at the end, please fill out the survey. An announcement was that I'm going to be doing these at least once a quarter, or maybe once a month. Just please share this with your friends. Like I said, this is a hobby for me. I'm very excited about just sharing information, passing information from people, to my friends, to my family, to my colleagues. Thank everybody. I want to know, let me see, I want to make sure I answered everybody. Damali, thank you. My sister, thank you. Let me pause this.